And what's up, everyone? This is a stock market daily analysis from the team here at SellThatOption.com. Okay, so let's get into today and kind of talk about the close of the year. We haven't spent a lot of time over the last couple of days due to the holidays. Today is the 31st of December, last trading day of the year. So let's get right into the spiders and let's kind of take a look at what's happened over the last couple of days. So we saw this massive decline right through here, okay? And then we saw two major up days, really another close to an up day. I think on this day it finished just a little bit under, and then we had a 1% or so increase today. With that being said, let's talk about some of the realities and some of the things that I'm seeing right now in this chart, okay? I still think that long term, right, thinking over months, not weeks, not, whatever, but over the course of a couple of months, we're actually going to continue to see a bear trend. That's what I think is going to happen, right? And here's why. We fell so significantly from really right here at the top of this trend line on, what is this, the 3rd of December. This is at 280. Right, we went from 280 all the way down to 233 in a matter of, what is this, 23 calendar days? That's less than 3 weeks really worth of trading. And so it's significant, okay? It's significant. We still see a massive death cross right here that's only been exacerbated, okay? For me to change any long-term outlook on what's going on right through here, I'm going to have to see, right? I am going to have to see a recross of this 50 simple moving average over the 200 before I think that we're going to go back into a territory in which I would feel comfortable being real long these major indices and not having a bearish outlook. The other thing that I want to say here too is this moving average 9 exponential moving average. If we were to somehow cross above this 50, that would also change my more short-term outlook. If you notice right here, we did close above it for the first time. Okay, we closed above it for the first time, and so going into the new year, it wouldn't surprise me if we saw an up day in the spiders, right? But there is so much room now between the 200, even the 50, and where we're at right now that we've got some very tradable, really tradable action in here. And so if we were to just go to the trade tab, you can see that I do have some positions on, but let's just theoretically, and again, I'm not a financial at all. This is an EWZ. So let's get into the spiders, and you'll be able to see that I'm even in, I've got some positions open here in the spiders, right? But what we're going to see, so let's just go, again, I'm not a financial advisor, but if I were to think about some of the things that we're seeing, in the market, there's certainly some very tradable action through here, and some real tradable ability to get the job done based on some of these simple moving average lines, based on some of these trend lines that we can draw, some of this technical analysis, some of these very basic support and resistance lines. And so I think that until we change really over here, and we change these 50 and 200 simple moving average lines, I'm going to be bearish. I'm going to be bearish on the major indices, specifically the spiders. As we move into the Qs, we can see very similar stuff going on in the Qs. These charts look so similar. You can see 3 major peaks. I would love to see a move back in here to get me a little bit more of a defined lower high, which is something that I think we're going to see in all of the major indices here. The diamonds was the last to get that bear cross or that death cross, but it definitely still happened. And so I think that it's worth noting. I do. I think that it is certainly worth noting. We see the 3 lower highs, and we're coming up off the low. But again, you saw a massive decline. Massive decline from the highs, and so we have to be willing to break through some of these levels before we change our overall outlook on the markets. Again, this is going to look super similar. We all close at the high of the days here. Closing at the high of the days with such a strong candle makes me think that we, might have an up day or at least gap up a little bit here in our major indices. Going to the VIX. Now, the VIX versus VXX has been really interesting. So we see that the VIX itself, VIX, the volatility, closed at the low of the day. So did VXX. But the other thing you're going to notice is that this is down 10%, and this is only down 3%. And so in theory, what we'd like to see is a 1-to-1 correlation between VIX, VIX, and the VIX, VXX. We're not seeing that, right? We're not seeing this 1-to-1 correlation at all. And in fact, we're only $6 down from the high, and we're 10 points down from the VIX high, if not a little bit more. Yeah, so 10.5, almost 11. 10.8, yeah, so 10.8. And, I just think that we're going to continue to see this this type of movement. One of the things you'll notice is that VIX, this box right here, is where I tend to see equities be bearish or bullish, excuse me. And so I tend to see this box. If we're in this box, we are bullish on equities. From about this this line, the 17 to 30, there's not a ton of fear in the market for me. I tend to think that we are certainly bearish for equities, but we're not in a place where we have fear-inducing type selling. But then when we get above 30, as we saw on this day, you'll notice that it so nicely correlates 1224 with 1224, right? It so nicely correlates to the bottom right there that we have to at least be willing to acknowledge that the VIX can be somewhat predictive. All right, let's get into some of our major type of indices here. I don't really know that there's a ton to note. We had a nice little up move in GDX, which is great. So GDX got us a couple of percentages. We've got a couple positions on in GDX. We were up 3%, which is good. We have TLT, not a ton. Gold, so a little bit of a divergence between gold and GDX, and so our miners were a little bit better, but we've seen a much more pronounced trend here in GLD versus the miners here, which, as you can see, these moving average lines are pretty crossed. They don't look up. That's FXC. I'm sorry. Right through here, our lines are really crossed. Not super great here in GDX, whereas it's been really kind of systemic and methodological here in gold. EFA, nothing. IYR, we've come off the bottom here in IYR, which is nice. I mean, the IYR bottom, again, you don't necessarily expect to see this kind of movement in IYR. It tends to be a pretty stable security. And so for in a week to see this kind of more than a 10% move in IYR is really, really unusual. But we've rebounded about a third to a half of those losses in that particular security. OIH looks like it might be trying to finally really put in a firm little bottom here. 13.13, we're up a buck. Not really a ton of tradable action here unless you want to go really big with size. I don't necessarily want to do that. XLF financials looks like they are finally putting in that bottom. They were just in that free-for-all for about the month there. XOP, XLE, we had oil. Oil looks like it put in a little bit of a bottom here, trying to move. See if we're finally starting to get, looks like oil is finally, potentially putting in a little bit of that move here in oil. XRT, really nice up off the bottom. Silver. I haven't paid attention to what's going on in silver, but it's certainly worth noting. We had a major gap up on last Wednesday. So last Wednesday, day after Christmas, and we've really continued this rally here in silver. Not sure what caused it. I haven't paid that much attention, but this is the type of rally you don't get them often in silver, so it's nice to see. 1452. I wonder how close that is. We're all the way up at 1635 is the major level, and where our resistance, one of our primary resistance levels, are gonna be. So that's where we're at in the market right now. Kind of looking forward into 2019. Looking into 2019, it's going to be interesting to see how this plays out. Are we going to eventually re-challenge this bottom right here during the course of the year? We might. It certainly would not surprise me. We've got a number of resistance levels right here. You can tell, got a resistance level right here. You got, of course, the high. That we're eventually going to have to break through at some point. Otherwise, it's going to continue to act as resistance. We've got these simple moving average lines. We've got the death cross. We have this trend line right here that acted really, really nicely as support for a while, and then when we broke through. So I'd be looking to see if we can break through this 261. I don't know that we're going to be able to, but that's kind of one of the next big areas for me, is that 261, if we're even able to break through 252. So I'm looking for this trend line to happen. We'll see what happens here, but that is kind of where I'm at with the market. So that's it for today. If you have any questions, please feel free to reach out to me at Ryan, RYAN, at SellThatOption. Otherwise, as always, stay humble, stay hungry, and here's to an amazing 2019.